Good afternoon, distinguished guests. On behalf of the Bombay Chamber of Commerce and Industry, this is Tina Joy welcoming you to our mutual fund conclave. The topic for today's conclave is charting tomorrow's portfolio. With a growing middle class and the increasing financial literacy among Gen Z, the Indian mutual fund industry is poised to play an even greater role in wealth creation and financial planning. The evolving regulatory landscape, innovative fund houses, and digitization further enhances its growth potential. It is in this background that the Bombay Chamber, under the aegis of its BFSI committee, has organized this conclave. I now invite Mr. Sandeep Khosla, Director General, Bombay Chamber of Commerce and Industry, to deliver the welcome address.
Thank you, Stina. A very warm welcome to each one of you, and my apologies for the delay. As you know, there's a lot of traffic which has ensured that some of our people who are attending as well as speakers got slightly delayed. But I guess, the main meet is here today. I mean, you can see the pigeon. Normally, they would be at the Wankhede Stadium. But today, they also believe that mutual fund is far more important than the India-Sri Lanka match. So when we set out to do this, we had initially planned it at our office at a conference room in Ruby. But as the kind of, feedback we got with a lot of people, we have over 250 registration, and our hall is small, which cannot accommodate more than 80 people. We decided to come here. Our president, Ritesh Tiwari, and our past president and chairman of our BFSI committee, Nilesh, both decided that we should do it here. So we shifted it to this place, not knowing that it was clashing with the India-Sri Lanka match. And in hindsight, I can only say that, as the mutual fund people regularly say, sahi hai, because we got the right kind of audience, we got the right kind of speakers. And a brief about the chamber. We are the oldest chamber in the country, 187-year-old. In fact, we are celebrating our 187th Foundation Day on the 14th of December. And over the years, the chamber has tried to ensure that we are right there in ensuring the growth of the industry. Whenever you go anywhere today, we see various communication on all fronts, whether it's FMCG, whether these are IT, ITS products. But one thing which is constant everywhere is the mutual fund enticing all of us to invest there. Whether it's the television medium, there's a cricket match going on, you'll see Dhoni, you'll see Sachin Tendulkar promoting it. To get to the bottom of this, we requested Nilesh that let's do a session on mutual fund, which in the past 4 or 5 years we haven't touched upon. And Mr. Shah ensured that we have a panel which is second to none in the country, and that would ensure that we all take enough from here. Today morning, we again had another session which was on taxation, and a lot of people from the taxation, we had one on GST and one on angel tax. They have stayed behind to listen to us. So thank you once again, our panelists, our moderator, Latha, who's here, and all you people who could spare time and be with us here today. And I would like to also thank our sponsors, HDFC, Asset Management, Kotak Asset Management, and all others. So thank you once again, and back to you, Stina.
Thank you, Mr. Khosla. To set the theme for today's conclave, we have a thought leader who has over 25 years of experience in financial and capital markets and has managed funds across equity, fixed income securities, and real estate for local and global investors. I now invite on stage Mr. Nilesh Shah, past President, Bombay Chamber, and Group President and Managing Director, Kotak Mahindra AMC, to present the theme for today's conclave. A huge round of applause for him.
Hi, very good afternoon to everyone. The most important announcement, in 4.4 overs, India is 22 for 1. Rohit Sharma is out, but Virat Kohli and Shubman Gill are betting. Coming to the mundane aspect, when I was walking up, Nimesh mentioned that, Nilesh, you have 30 years experience, not 25 years. But I guess as you get old, you want to be stuck at 25 and not go beyond it. So Nimesh bhai, in your introduction also, we'll keep it at 25. We will not go beyond 30. On a serious note, if we look at mutual fund industry, we have far more happy customers than, let's say, unhappy customers compared to probably any other industry in financial services. We have truly created real wealth for our investors by providing above inflation return. Transparency-wise, we are probably better than anyone else, not only locally but also globally. Performance, transparency, regulation, in virtually every aspect we are scoring or ticking the box. But when it comes to number of investors, we are still at 4 crore. Looking at from where we all started, this number looks amazing. Pre-COVID, we were at about 1.75 crore investors. Today, we are at 4 crores, so not bad. But compared to where we should be, we have a pathetic performance. 18 crore Indians traded in crypto and lost money. And that happened in a very, very short period of time. Every day we hear Ponzi schemes where investors keep on losing money. A scheme like PSCL 2 decades back could collect 60,000 crore and destroy everything. A simple plain Google search on scams and Ponzi schemes reveals about 2 crore Indians have lost more than 2 lakh crore in just last 2 decades in Ponzi schemes. Number of people losing money in gaming or people playing gaming to lose money is more than 10 crore. SEBI's research suggests that 89% of people who trade in FNO end up on the losing side. By taking into account transaction costs like brokerage and STT, the losses will actually widen. Somehow or other, Indians have developed a very keen ability to venture into those areas where there is surefire way to lose money. And unfortunately for mutual fund industry, we are not able to attract them as much as we should have attracted. Today's discussion is centered both from manufacturer side as well as distribution side. How do we provide financial security to every Indian? How do we ensure that the platform which we have built as an industry over the last 3-4 decades results into far more explosive growth, not only in terms of AUM, but also in terms of number of investors. Hopefully, with this 2 panel discussions, we'll have enough material which we can then take it up with regulatory agencies. Undoubtedly, regulators have played a fantastic role in growing our industry. Their guardrail has ensured that we always remain in the game and don't venture out of it. How do we ensure that as manufacturer, distributor, we achieve the vision of our regulator of providing financial security to every Indian? Thank you. Over to you, Tina.
Thank you, Mr. Shah, for those invaluable insights. It has definitely set the tone for today's discussions. Coming up next is our first panel discussion for the day on the topic Mutual Fund Maturity in India, Future Trends and Investor Preferences. To join Mr. Nilesh Shah, I invite on stage our other panelists. Please do give them a huge round of applause. Mr. Navneet Munot, MD and CEO, HDFC AMC. Mr. Nimesh Shah, MD and CEO, ICICI Prudential AMC. Mr. DP Singh, DMD and Joint CEO, SBI Mutual Fund. And our moderator for the session, Ms. Latha Venkatesh, Executive Editor, CNBC TV 18. A huge round of applause. I'm sure we can do better than that. Thank you. Over to you, Ms. Venkatesh.
Thank you very much, Nilesh, for inviting me to moderate a panel of friends and also for not stealing my thunder. I have this data and I was so scared you were going to say the same thing. Now, all of us know this, but it merits repeating because it just feels good. Okay, number of unique mutual fund investors. 2.2 crore in March 2020, over 4 crore for the last available month we have, September. Unique demat accounts, March 2020, 4.2 crore, and as of September end, 9.1 crore. Individuals holding mutual fund accounts had invested 12 trillion rupees as of March 2020, and now it is, I think, 28 trillion. It could be more. This is September 30 numbers. There's more from, I mean, if I'm going to compare it with FPIs, which is the usual rival for domestic investors, between October 21 and June 22, FPIs pulled out 2.56 lakh crores. Indian markets didn't shudder much because mutual fund and domestic investors pulled in 3.1 lakh crore. I could go on and on, but that's the excellent expressway we have traversed over the last 3 years. Let me just end the initial remark with the way forward. 4 crore is a damn good number for individual investors, considering it was only 2 crore just 30 months ago. But total number of accounts with PAN cards linked to Aadhaar, 51 crore. That's the game available. So let me start straight away with that to you, Nilesh. Do you think that we should be able to do very well this kind of a CAGR for the next few years, at least for the next decade, looks a given?
So undoubtedly, Latha, we were at about 2 crore pre-COVID, and now we are getting 1 crore unique customers virtually every year, rounded off. So there is acceleration. But as you correctly mentioned, compared to 51 crore people who could be our investors, we are at 4 crore. That's less than 10% penetration. And more importantly, today's mutual fund industry, despite a lot of its effort, is still urban-centric. B30 contributes far more, top 8 cities contributes far more. It's still HNI-centric. We really have to go down to the ground level, at retail investor level. People who got greedy to get into cryptos, Ponzi schemes, Vichy, chit funds, those are the people who need mutual fund, and we have a long way to cover over there. We have made a good beginning, but it's now no longer a question of acceleration, it's a question of jumping over. Really take a big, high jump.
Nimesh, actually the same question to you. Doesn't it, at least to me, it looks like we are good to go for the foreseeable future. And by foreseeable in financial markets, I think a decade is a long time. It looks clean.
Yeah, the rate of growth is itself, I am quite okay, because this industry has got 4 crore brand ambassadors today. See, the beautiful product that the regulator has ensured that we have created, hand on heart, it is good for the final customer. Margins are less and etc. That's good. The lesser the margin, the longer the business will go. So that's perfectly okay. The lesser we charge the customer, the better. And I feel it's very important that the growth is calibrated. So I am not worrying because there are a lot of people who are doing business development for me. Right? We have got only 4 crore customers, but there are 8 crores individual demat holders. They are doing futures and options. Right? So they will come into, let them lose money over there. As 89%, Nilesh said, 89% are losing money. They all will come to the mutual fund segment. So I feel We only have to ensure that we have got happy customers. All the people sitting on the stage, we are very, very concerned that the customer should remain happy. So we like this kind of markets. Markets are growing steadily. You don't see ultimate euphoria. So it's not a very expensive market. It's not a cheap market. The past people have made money, and I'm more concerned that the people coming in should make money. So 1 year down the line also I can say that 99% of our customers are happy customers.
A round of applause for that, for sure. I mean, we've been safe from scams, safe from, very unfortunate experiences which other products have. But I must tell you that the loose balls is only in the first round. Huh? Uske baad I can become Shammi also. This is only at the moment. Okay, this is not loose ball really, but something constructive. Navneet, since you head Amphi.
Why are you choosing me for that? And I'm not that good a batsman anyway.
Okay. No, the issue is that do you think any regulatory, legal, or any other steps are needed to continue to keep this trend safe or even to accelerate it? Anything that we can put in as a request to SEBI or government or finance ministry or anyone?
So everybody must appreciate that if India goes from $3.5 trillion to $20 trillion, which is almost same as where United States was till a few years back, or bigger than some of the other large developed economies are, how do we ensure that we have the social security? I think India has done a phenomenal job in last 8-9 years in providing the basic necessities of life. But that's not enough for the retirement security. Given the public debt to GDP, even after 20 years, we won't be in a position to give what, let's say, some of the countries in Europe can do. Even then, you see these pictures of buses getting burned in Champs-Élysées in Paris, a strike in UK, people are not able to make both ends meet. I recently read the largest economy in the world, the United States, where the industry is like 100 years old, capital markets are so developed, almost 1/3 people won't be able to make their both hands meet in the retirement. It takes a lot of efforts to create the security. In a democratic society, you have to ensure that we have inclusive growth. Government policymakers are trying their best in many ways, but we also have to ensure that there is a high amount of participation in assets like equities so that people can create their retirement nest. Otherwise, so while we take pride in being the youngest country in the world with a median age of around 28, 29, but 25 years later will also be a country of one of the oldest population, largest number of old people as well.
We will all be there.
We will live longer, right? The average lifespan when India got independence was around 35 years. Today it's more than 70. In our lifetime, it may cross 80, 90, 100. Then you're going to have that security for 30, 40 years. The social structure is a lot different than what it was till previous generation. So I strongly believe that it's not about one or two. I mean, we always have from MFI, every year we send budget recommendations. We always have our wish list with the regulators, so on and so forth. But I think a larger policy objective that this is very critical. Just like for this government, physical infrastructure is very critical. Basic necessities of life, quality of life is important. Ease of doing business is important. Digital infrastructure is important. This should also be one of that agenda that we want every Indian to have participation in equity so that fruits of growth are distributed to everyone and we create a more secure retirement for everyone.
No, it's just that if you put that in front of the finance ministry,
Exactly.
you put that, then you will have the PFRDA, IRDA, all of them competing for honors and whatever, tax concessions or any concession.
Not exactly.
What I mean is that they will all they'll throw their hat in as social security providers, is all I'm saying.
Market is big enough for everybody, right? There's so much to do.
Yes, 51 crore.
The banks in this country have got a deposit base. We don't have to do new business development. In the products, on the liability side, we have got 180 to 190 lakh crores. Right? In the next 7 years, if that goes around 350 lakh crores by the rate at which develops. We were 10% of, mutual funds were 10% of the banking industry 10 years back. Today, we are 24% of the banking industry. By 2030, we'll be 1/3 of the banking industry. You are talking about from 47 lakh crores, we have to move to 110, 120 lakh crores. So to manage that kind of growth is what, so as long as we don't goof up and we don't create those accidents. So it's not asset management company, it's a risk management company now. Right? So as long as we manage the risk well, which we have done more or less till now. That's going to be the key.
So long as we don't goof up, that's important. And it's very difficult to, know that you are goofing till after the event. But last loose ball, Mr. Singh, I was asking you what can the government or what can other authorities do to help the industry? What can the industry do to help itself? In the sense, I think mutual fund sahi hai. It was a concession given by SEBI that you can spend money on education. And that has worked. It seems to have obviously worked. Do you think you all need to do better than that? Explain a little more. Sahi hai, theek hai yaar, lekin samajh mein hi nahi aata na kabhi kitne sare products. So I just want to know whether the industry can do something to speed it up.
No, definitely. Now, Navneet being there at the helm of affairs and otherwise also, as you rightly say, is the right time to send more simpler, more clear message to the next level. Mutual fund sahi hai, iske aage mutual fund mein kya sahi hai, kiske liye sahi hai, kitna sahi hai, all those questions have to be
I think the educational programs have to take some steps forward.
Yeah.
It's giving too basic an image for too long.
Yeah, it has to go to the next level. And second thing is, I'll go back to the previous question which you asked Navneet about the regulator. What I think is the biggest thing is that we are B2B as industry, and the intermediation, the remuneration to intermediary at the base level is an issue. Because regulator has put in everything on the trade model, no new intermediaries are coming. The intermediaries in insurance business are more than 1 million, 2 million rather. And in our industry, number of intermediaries are very, very low because the fresh intermediaries are not coming. People are not, and then there's no remuneration neutrality because we have to give everything out of the TER which we are charging. So what is good for the investor may not be good for the distributor, may not be good for the manufacturers. How to create more value, more business, how the message is clear, so that intermediary also feel that even selling the low remunerative product, but if it is good for the investor, I'll have more volume. So we need to educate the investor, we need to educate the intermediaries also, and need to educate ourselves also, that we should also push the low remuneration product much more than what we are doing today.
Fair point. Nimesh, let me get that to you. The intermediary, the arithmetic that I was told is that he makes all of 8,000 rupees if he gets 1 crore of, amount into investments. Is the DSA so badly off that it may not be a lucrative industry? When I saw the numbers of ARN, by the way, that abbreviation means AMFI registered numbers, that looks fairly healthy. But is the remuneration to the DSA not good enough? You think the industry has to ponder over it?
While the number of distributors might look healthy, it is not adequate looking at the size of the India, but that's a different issue. You have to see how many of them are serious distributors who earn more than 10 lakh rupees or 5 lakh rupees, whatever we decide. So when the number drops so much that it would be less than 20,000 people across the country, IFAs, who would be earning that kind of money. So where households run on mutual fund income, right? So, but again I am saying, I don't believe this is a margin business. I believe this is a volume business, right? So you have to create that scale. The economics may not be as bad as you are saying, because if somebody distributes 1 crore, minimum he'll make 60-70 basis points on that. So it's not that bad. But is it good for the smaller ticket sizes? Because somebody has to give 50,000 rupees, a distributor is not going to make effort because in the whole year, maximum he can earn 500 rupees out of that guy. That won't take care of...
He can't even cycle to that person's house and come back.
So that's what. So economics for the distributor can come out of volume. It will come out of two things. We're creating a pull product. It's good that we are charging less to the customers. I am again saying, if this business has to sustain for a long period of time, and we have to worry about passives also coming in, right? So we have to beat the benchmark. It is our capability to beat benchmark. So how much can be charged to the customer? The strength of this product is that we are charging less to the customer, right? So I don't see anything. So it's a volume business. We at ICICI Prudential, our mindset is very clear that we don't want to charge more. We want to charge as less as possible to the customer so that there is enough for the customer to make. If I beat benchmark by 300 basis point, I charge him 150 basis point, then also he has got 150 basis points to take out to him. So I don't think we should be charging the customer more. We should be creating volumes. We'll have to see how we remunerate the small transaction size.
No, I am the last person to want you to charge the customer more. Let me be very clear. CNBC TV18 doesn't allow you to buy shares. I mean, you can, but there are hajar rules. You have to hold it for 1 year, declare it so many times. So all of us are in mutual funds. I'm your customer. I don't want to be charged more.
Correct.
But do you want to give away a little bit of your profit so that, you know,
if
I'm
everybody's-
just asking you, is the distributor an issue?
Distribution should become wider. We have to ensure that people who are the banks in the country find it a good business to do
Is the
this.
remuneration good enough to ensure that?
See, today a bank would not be, I'm not saying they've got 40 products to do. It's a contribution per hour we had learnt in school, right? There is something called as contribution per hour. A guy sitting on the bank counter will have 35 things to do. He has to get CASA, he has to sell home loan, he has to sell car loan, he has to service the customer. There are too many things to do. Mutual fund is the 18th product on his list. So there are many other products. Then we come to the independent financial advisor. We have to ensure by using more and more technology. See, the issue is you reduce the cost for him. How do you reduce the cost? That the distributor as well as the customer uses more of online models. As we become more and more online, I have got a strong view that entire mutual fund, today it is possible to buy it with a paper also, right? We should not be using paper at all in this mutual fund industry. It should be completely, anybody wants to buy mutual fund, it has to be only online. Cost will come down by that. So ultimately we have to see how we bring the cost down and charge the customer the same thing and all of us make more money. I don't think the mutual funds are making abnormal money. If you see the total profit of the mutual fund industry is around 7,000, 8,000 crores, right? So it's hardly on a AUM of 47 lakh crores. Mr. Singh will tell you that we are the size of the State Bank of India. Just compare what State Bank of India makes by managing 47 lakh crores and what we make by managing 47 lakh crores. So 7,000, 8,000 crores is not even 20 bips, right? I don't think profits are just manageable.
There are two SBI guys, former SBI guys also there.
You can add on to that.
No, the point is, it's not that, the point is not being just that we should charge more to pay intermediary more. The way we pay to the intermediary is the question. Because at the initial level, what happens over the period of time, when the volumes are created, one can sustain.
Yeah.
But the initial period, as you said, 1 crore. 1 crore will give a person maximum 70,000-80,000 rupees. 70,000-80,000 rupees is what? Not even 6,000 rupees per month. Nobody will enter into any business for 6,000 rupees per month, whereas the Narega guy gets 18,000 rupees today. So for that, what we are suggesting is that at the initial level, the intermediaries, they have an acquisition cost. If we want fresh talent to be on, the mutual funds are capable enough to pay them upfront for 1 year, front load, and then go for after.
I don't know. We have to see if the regulator is going to agree to that, since they are the ones who removed the upfront in the first place. Whether they will walk back a couple of
steps. What you're saying is only upfronting the trail only, nothing to be paid, so that it makes a good business model.
Got it.
That's the point.
Okay, fine. Maybe that's something the industry will ponder and try to build into the rules. But, you know, Nilesh, I have another fundamental problem as a customer. As you go from the B30, from the top 30 towns, you know, and even actually in the top 30, even for me, someone whose bread and butter is, you know, finance, and for whom English is not a problem, I am confused by the welter of products on offer. I mean, hybrid, growth-oriented, dividend-oriented, and then fixed income, bolo hi mat, some 10 varieties. Even in equity, I get confused between flexi-cap, multi-cap. I get confused between balance advantage and multi-asset. They all seem to be doing the same thing. How are you going to communicate, yaar? You know, when that fellow who manages our accounts phones me, I'm with him for about 5-10 minutes. After that, the head starts throbbing when he's suggesting. It is like terribly confusing for someone who's in the game, in a sense. So don't you think the industry needs to simplify itself if it wants to go beyond T30?
Simplification, undoubtedly, yes. But Latha, I am like a Mysore cafe. I have sada dosa, masala dosa, rava dosa, onion uttappam, tomato uttappam, ghee sada, rava masala, masala sada, Mysore masala.
मेरे को वो समझ में आता है. I know the difference between rava dosa and sada dosa. And everyone, even a North Indian who comes, knows the difference between sada dosa and masala dosa. Not only I, because I am from the south, but I don't know the difference between so many hybrid.
How did you distinguish between rava masala and sada? It happened over a period of time, and there are so many restaurants, so many waiters, we get used to it. My real challenge, if I have to launch only one fund where investors can invest, I'll launch simply an asset allocation fund. We have been running an asset allocation for last 17 years, which has delivered 16% compounded return. वो हर मर्ज की दवा है, हर फंड मौला फंड है. But if I would launch only that fund, you know what would have been my AUM? It's about 1,700 crore fund. There are so many investors whose needs are different, and they need to be provided different product. Now, if you go to a large-scale marriage, you will get confused by the buffet spread. But fair enough, we figure out our way. So simplification, yes, and which is where SEBI came out with industry categorization, product categorization. It's a journey. We haven't completed the journey, but hopefully slowly and steadily we'll be able to overcome the challenges and will become as popular like the dosa family.
You're absolutely popular, because who would want to put it in FD? So, you know, out of necessity, we are all in mutual funds, almost entirely, 100%. I mean, if not 100, maybe 99. But Navneet, do you want to speak about this or respond to this?
I think
honestly, I don't know, ask your mother, ask your mother-in-law, ask your, I don't know, father-in-law, people who are not in finance. I'm assuming they're all not in finance. Don't they tell you that, you know, please, if you all can use language that I understand, and if people who are qualified in English medium of instruction and who are in financial circles are so confused. Navneet, is there, I don't know, the industry has to think for itself, but is that a problem?
No, Nilesh, I asked you about that whole menu card of, I don't know, Purnima ka bata rahe the, kahan ka bata rahe the aap, or Mysore cafe ka. Like, I came to Bombay when I was 22. In fact, I traveled outside Rajasthan first time when I was 17. I'd never traveled outside Rajasthan. So first time, wherever I went, I had the same issue, right, in the menu card. I didn't have this, like, rava sada, fir rava masala, usme bhi kuch jain chutney alag, wo alag, right? But dhire-dhire samajh gaya. I think the same thing is industry is doing. But credit to us, after 100 years in United States, if you look at the funds, the title of the fund versus the benchmark versus the underlying portfolio, some of these things will be quite different. In India, I think SEBI, along with the industry participants, has done a phenomenal job in standardization, in kind of uniformity in our benchmarks. If you are buying a large cap fund, you know that you are only investing in large cap stocks. And the benchmark is Nifty or a BSE 100, something like that. It is not there even in several countries. In US, you have a fund which is only investing in high-tech companies. What is the benchmark? S&P 500. Somebody may be a deep value investor, investing in deep value stocks. What is the benchmark? It could be S&P 500 or something else. I think in India, we have done a good job. And if you are very confused, all four of us have a multi-asset fund. You will get equity, you will get fixed income, you will get gold, you will get all the exposure, baki kahin mat jana.
You are telling me, I will tell you about everything about multi-asset. I believe in funds where the fund manager has full liberty.
I think our funds
so
are
my obvious choice is
quite simple, quite straightforward, I think extremely, but there is always a need for us to go to a, you know, the layman. In fact, a lot of these funds that have got created are to make it more simple, honestly, not to make it more complex. A lot of this innovation that has happened.
I still think that there can be people who are a little put off by the number.
Latha, I completely agree.
1,451 funds are there.
I completely agree with you, but the question is, are we a prescription product or are we an OTC product? You're asking the manufacturers. The manufacturers want to ensure that we manage our risk well, we diversify and we manage our risk well. And we want to ensure, so is it if it is a prescription, the distributor will explain the customer. We'll go and explain the distributor, and the distributor will go and explain the customer. So I have got 10 products. Out of these 10 products, the distributor will decide which two he wants to show it to his customers. Have I completely informed the distributors? Yes. Then it is up to the distributor which product is suitable for which customer. I am a manufacturer to that extent. While I agree with your point, but I think investment is complex. we should not try to too simplify it. And we are investment guys. This is more of a distribution question. How will you make it simple for the customer?
Glad you spoke about distribution.
But also that each investor is very different, right? I mean, Sumaira will have a portfolio which is very different than yours risk appetite. Mr. Khanna might be doing a lot in fixed income also, or maybe hybrid funds. Varun will do more sector thematic, doing his risk appetite. Gaurav might be doing something very different, including some of the international funds. Each investor is very different. Their risk appetite is different. Their return expectations are different. Their time horizon is different. Their liquidity needs are different. So I wish that we can have a magic bullet where there's like one fund which is Parisha for all, but that cannot happen, right? That's why
I'm
we
not
need to
swinging
have
to
all the
one,
products.
but I'm
At
only
the
saying
same
that
time, one
maybe
really-
you can have fewer
I'm
products.
repeating the same thing, but what we did in 2018 together as an industry and with the regulator, the classification and the standardization of benchmarks, etc. I think it's a phenomenal work. SEC is yet to do that. They've just started the work on what India has already done a couple of years back.
Okay. Yeah, I mean, that kind of satisfaction is good, but I must tell you from a consumer's point of view, and I'm entirely from a consumer's point of view, we have miles to go over there. It is a little, you know.
That has to be the next part of the mutual
Yeah,
fund segment.
that is the point I'm coming to. Since you also spoke about distributors, Mr. Singh, let me start the next round with you. Isn't there a talent crunch? I mean, already in the financial sector, the banks are complaining of 30-40%, turnover, attrition. Mutual fund every other day, that man is resigning. And no, I don't want to give away all the secrets about all the new news breaks that we have with us in terms of people moving. But aren't you all faced with a talent crunch? Suddenly the demand is huge. And there is rival demand for financial products, of financial product manufacturers. Is the industry faced with a talent crunch?
No, it is a challenge.
Both in distribution and manufacture.
It's a challenge. It's definitely a challenge. But at the same time, you have to be very agile for that. But the challenge is more because especially from the investment side, people are more forced there because of the regulatory activism which is there. They're more what they can do, what they can't do, even if they want to go to the washroom, then they have to carry the mobile along, the recordings, and so on and so forth. There are so many things which they feel is bad. And see, industry, and I think all these years they are talking to the regulators also about these things. But people feel when the markets are in bull run, all these things happen. It's not the first time it's happening. But I think more or less it's not very, very challenging position as of now, especially for the big fund houses, all the big fund houses.
You would agree? Not much of a talent crunch issue. Nilesh? Yeah, Nimesh?
I'll take it. Why I'm saying I've got an exactly opposite view to you. We manufacture fund managers also, right?
Yes.
India has got too much talent. There are young
You all
people.
manufactured bankers also.
So that's it. But since I'm talking about fund management, so I feel that large organizations that we will take a lot of freshers, and there are very smart people. The 23-year-old of today is way smarter than the 23-year-olds when we were that 23. So there are too many smart people. We run a huge analyst team. Out of the 35 analysts that I will have, I'm preparing them for fund management 10 years down the line, right? So it's a factory. So do fund managers leave my company? Yes, fund managers can. We want them to stay, but at times they will leave the company. And when they leave, there are others to take over. I'm saying there would be one of the biggest fund manager in the country left. The organization has changed. There's 2-3 more people have come in. As long as you have the ability to attract talent, and as long as you have the ability to train talent, it is okay. The country is too talented.
So
That's
crunch
my
is
take.
not an issue. I just thought that the demand is so huge. And I'm hearing so many people changing jobs or even leaving the industry. And normally when the reason they give you is, itna compliance hai, I'm sick of this industry. So there are people who are saying that. So I just wanted to know if talent crunch is an issue. Let me now come to the broader issue of the economy itself. Nilesh, is it economy-wise, are you confident that we will go on in this highway? We've done very well in the last few years, and it is very tempting to extrapolate it. But to become the third largest economy and on, see, no matter how much we may be hating the way China does business, they created their Baidu, they created their Alipay, they bought Lenovo, they're up there in Huawei, whether it is 5G, R&D also they've done well. Technology they have done well. We are not there in cutting edge. There is a Sundar Pichai and, in foreign companies, Indians have made it big. But homegrown, how many brands do we have? Do you think we may hit some kind of speed breaks as an economy in this dream that we have?
So your concerns are valid. We have 2-3 fundamental misses. One, we forget about fabrication plant. Semiconductor chips, that's the future. Korea started in fabrication. We were way ahead of China in fabrication, and there was a company called Punjab Communication Limited, which had a semiconductor chip plant in Punjab. But China leapt ahead and we couldn't really progress. Maybe 20 years down the line, but we are now trying to bring fabrication into India. The second thing which we missed out was fermentation. India had fermentation plant way ahead of China. There was one Hindustan Antibiotics at Pimpri Chinchwad. There was one by Alembic in Baroda. Even Torrent Gujarat Biotech came out with fermentation. That's the base of the APIs and bulk drugs. Today, China is way ahead of us. We missed that bus. Today, the third thing which we are missing is foundation platform. In AI, every country is trying to develop their foundation platform, which are wanting to be the big economy. China has one, US obviously has one, Japan is progressing on that. We are nowhere. Now, yes, we have certain misses like fermentation, fabrication, foundation. But have we converted, despite those misses, opportunities? Answer is yes. Without fermentation, we are the largest generic producer in the world. I'm not vertically integrated. I could get risk if China stops supplying APIs to me. But as long as my formulation factories are US FDA approved, Hyderabad has more number of US FDA factories than any city in America. So yes, I missed fermentation bus, but I captured the formulation bus. I missed fabrication bus, but 1/4 of all the chips made in world is designed in Bangalore. In terms of usage of chips, we are there, and with PLI scheme, we are getting into electronics component, and hopefully we'll catch up the fabrication bus. On the foundation side, I hope and pray someday India has its own AI platform or AI foundation. But if not, then I have to use others' foundation to create faster, cheaper, reliable solutions so that the services business can still come to me. So we have that jugaad mentality. There are some misses, but will India become the third largest economy and narrow the gap with second and first largest economy? Answer is undoubtedly yes.
Well, I have another issue connecting to mutual funds and the broad economy, the course it has taken. The cliche is to say K-shaped recovery. And you see it in several industries. Entry-level bikes, 100cc has not done well. Even October numbers, 125cc and above is doing very well. Entry-level cars, not done well. SUVs, they were 30%, now they're 50% of the incremental cars sold. So Navneet, that is to you. Are we growing in such a way that the base is not growing? I mean, it's growing, but not as fast as we would like. The migration from lower to middle and middle to upper middle is not at the clip that it should be. Is there a worry? Very good growth now, but will it plateau sooner than we are ready for?
So there's a famous saying that everything you say about India, opposite is equally true. Everything you say about India, opposite is equal. It's such a large, complex economy, such a large, complex society. There's not been any growth model in the world which comes anywhere close to us. Several of the economies that became developed, they were not the kind of democracy that we are. We are the most thriving democracy in the world. They were not when Singapore was growing or when some of the other East Asian tigers were growing or the way China grew. They did not follow the model that we followed in a highly democratic manner. So I think India has its own unique, I would say, model. K-shaped, maybe to some extent. I think the consumption isn't doing as well at the lower end as it should be doing, looking at the overall growth of the economy. Government has focused a lot on building the physical infrastructure, digital infrastructure, social infrastructure. with anticipation that we are building capacity for higher growth on a structural basis rather than just doling out the cash which gets the consumption today. We did that for several years, but that's why we could not grow at the pace at which we should logically be growing. Somebody has to build that infrastructure today, right? Otherwise, every few years we'll hit the roadblock. But at the same time, we need to do something little bit more. How do we really look at the consumption at the lower end? Maybe, I don't know, this particular quarter, this time I'm told that the entire the festival season is a little delayed, and maybe the whole wedding season that we were talking about a few minutes back, that the wedding season is a little late, and maybe I just hope that consumption at the lower end comes back. On the rural side, with the terms of trade shifting in their favor, hopefully over the next few months things should start improving. But India, from a low base, I think there is scope for everyone to grow. And I just make one point which you asked Nilesh, and he articulated very nicely about what India needs to do a little more. But we shouldn't just look at like some of those companies and just think that, oh, we don't have that. So Bear Stearns was probably the best securities firm in the world. Lehman was one of the best investment bank and maybe the trading firm in the world. LTCM was the best fund in the world. They're the all Nobel Prize winner. Credit Suisse was the best private bank in the world. None of them exist. And HDFC Bank, with the simplest of the way of doing business, with the most basic things in finance, with customer centricity, has become the 7th largest bank in the world. All of us should take a lot of pride in that. I can give you example of HDFC Bank. I'm sure all of us can give examples of many other such companies in India. And then I'm sure in next 10 or 20 years, there'll be many, many more.
It personally worries me whether, we can broaden at the mass level. The fact that there is so much premiumization so soon in our lives, it's good that premium products are selling, but if it is grabbing market share and the share of mass products is falling, it becomes a bit of a scare whether we are growing with adequate numbers. And I want to relate that to the mutual fund industry. Are you going to be hit by premiumization? Mr. Singh, you first on that. What if all the rich guys, and there is already some tendency of people to take out some part of their money from mutual fund and put it in PMS or put it in AIF? So before your mass expands, will your premium go away?
No, I don't think so. Because as you said, as Navneet rightly said, we are having so many countries within the country, so many niches within the country. We have just 4 crore people. Today the issue is that we are not getting money from the middle. It's a pyramid. We are either getting money at the top of the pyramid or at the bottom of the pyramid, not bottom of the pyramid, or through the very, very small savings like SIPs, etc. But the issue is, it will not hit us because more and more number will get into this. As you said, the more people are buying SUVs rather than small. The more people who have evolved, they will go to the PMSs, they go to the premiumization. That's happening, that's the way to go. But there's a huge number which will get into the mutual funds. There's a whole lot of potential which stays there. And when we look at our numbers with international numbers, there's various parameters like AUM to GDP ratio or the bank deposits to mutual fund AUM ratio. So we don't feel that there's going to be any challenge very soon. The way economy is going, I think even if there are some speed breakers, even if there are roadblocks, for mutual fund industry at least, there's huge number of people, the prospective people who are there, that will be good enough. And second, the way market has grown. When we are talking about the growth of our industry as such, it's not very, we should not be very happy about it because most of the growth has come through the market.
Are you convinced? I mean, what will happen if all your SUV guys go away to PMS and AIF, or at least take a large part, and you are left with 100cc where the market is falling?
So Latha, we are little better than Indigo plane and not like Vistara, which has business class, premium economy, and within economy some premium seats where you have more leg space. We have one plane, no premium, nothing. You invest 10 rupee, you invest 100 crore. I deliver same return, same product, same services, same transparency, same disclosure. As long as Nimesh mentioned, no goof up and value add to customer, people will come to us. हाँ, ये हो सकता है कि सुबह का भूला शाम को घर लौटे. But ultimately यही आएगा because we have superior product. There's no comparable product to us where everyone's interest is aligned. There are industries where manufacturer and distributors have no incentive and everything is loaded in favor of investor, like the new pension scheme. There you require government push. There you require tax incentive. Today salaried employees get 3% incentive to invest into NPS because of the 10% exemption. That's the cost government carries. On the other hand, if you go to insurance industry, that's more tilted towards manufacturer and distributor and less towards consumer. I'm right in the middle where manufacturer, distributor, and customer interest is aligned. This is sustainable model. And AIF and PMS is also part of, in some sense, mutual fund industry. Yes, there are more number of players in AIF and PMS than mutual funds, but let the best person win.
Are you as sanguine as
I'm
Nilesh?
confused.
I'm just a little worried whether more money will migrate.
I'm actually confused because ICICI Prudential Asset Management Company, one of the things that we run is mutual fund, right? We have got PMS, we have got AIF. Mutual fund is a super platform. When you buy and sell in mutual fund, you are not taxed. When you buy or sell in PMS, you will be taxed as an individual. So there are advantages of being in mutual fund, but if somebody wants PMS AIF, the same shop is available for AIF and PMS also. So
it's not a threat to the AMC.
In fact, it's a good segmentation where I want to run, we decide based on the risk level. Mutual fund is right for the retired school teacher in Guwahati, right? So 3 years, 5 years he stays with me, I have to worry about risk management in a different way in a mutual fund. In a AIF PMS, my risk manager will have different constraints. The concentration risk that will take in a AIF or PMS will be much more. The active risk that will take in a PMS AIF will be much more than in mutual fund because the customer knows that he is coming into this product and it is taking more risk because he wants to take superior returns. So that's, in fact, it's good segmentation that is required.
Okay. No, I thought you all defined yourself more as a subcategory of mutual fund, but if you see yourself as asset managers and that's how the AMC is run, there shouldn't be a problem. No
I
matter.
just wish that all our investors make as much money that over the next several years they also become our clients for PMS and AIF with the minimum amount they have. And I'm seriously saying this. If they continue for 20, 30, 40 years, highly likely that even a small SIP will make them at least eligible or an accredited investor to put money in this. At the beginning, you made a disclosure that 99% of your money is in mutual funds. Somebody as rich as you thinks mutual fund is the best product. There are many in India. There's enough business for us for next 20 years.
When you are on
as
TV,
rich and as wise.
I know that when you're on TV, people just assume you're rich. Anyway, I'll be glad if that is the perception that's gone around. Media genuinely has a problem in terms of remuneration. I know that, I'm sure none of you have media companies in your portfolio.
Glass is always
Anyway,
on the other side.
that's another issue. While speaking about mutual funds, you referred to the word that I wanted to catch on. Debt. Equity has done very well. But fixed income, ever since that tax crutch went away, is emaciated. You can see it's a very distinct fall. Do you think that's a danger, Nilesh? I mean, I cut my teeth, maybe like you, in the fixed income before I went into equities. So, I mean, there's a personal grief if the segment doesn't do well.
So actually, if you notice debt mutual funds, as a percentage of GDP or as a percentage of bank deposits, we haven't grown in last decade or so. Even before the tax advantages were withdrawn, our growth had stagnated. Primarily, people who are investing in debt wants a stable return from like a bank fixed deposit. And we have not been able to convince them to switch over from bank FD or small savings instruments to debt mutual fund, which are volatile, which has mark-to-market volatility, and where value addition is maybe 0.5% or 75 basis point. So yes, as an industry, we haven't found that much success on the debt side, which is the larger pool of savings, and we'll have to figure out innovative solutions. Globally, how do debt funds get their money? Essentially, banks provide leverage, mainly to HNIs and wealthy customers, and then they invest into fixed income funds. Since over here, the space for HNI and wealth client is limited, can we allow funds to take leverage and generate better return? There was a time when we could have generated double-digit return in government securities through leverage by locking into floating rate bonds, which were mispriced. Now, if I get opportunity to launch leverage product, obviously we have to disclose risks appropriately, we have to market it properly, all bells and whistles putting together, then I'll be able to attract investors. And once I start getting into part of their portfolio, they'll have happy experience and then they'll stay invested.
I don't see leverage coming anytime
Just
soon. I know my day job is RBI reporter, RBI beat reporter. So I don't see that coming. But yeah, Navneet, isn't that an issue? The debt, we are all carried away by equity.
It is,
debt
because as Nilesh bhai mentioned, in September 16, bank deposits in India crossed 100 lakh crores. The mutual fund AUM on the debt side, including the liquid, was 10 lakh crores. So we were 10% of bank deposits. One would have argued that over the next 5-7 years, this number is going to go up substantially, looking at what has happened in the rest of the world. Nimesh talked about that our AUM as percentage of bank deposits have gone up, but that's only because of equity. That AUM today would be around little over 16 lakh crores. The bank deposits are touching 200 lakh crores. So we have come down. Our debt and liquid AUM as a percentage of bank deposits has come down. It's a great product from a liquidity perspective, from a transparency perspective, from a convenience that an investor has, the diversified portfolio, so on and so forth, but it hasn't grown. And I think all of us, all policymakers, including I think in some other context, Nilesh bhai was comparing with some of the other products, we need to really look at a broader picture that if we really want a greater retail participation in the bond market, if we want our bond market to be a lot deeper and vibrant and robust, and next year, and by next year I mean that now we have been inducted into the JP Morgan Bond Index, everybody cheered that, we may be in another index, $25–50 billion will come into our bond market from global investors. I go back 30 years when we all cheered when foreign portfolio investors started investing in India. What it also led to, while it was good for the economy, what it also led to was at one point in time they were owning 25% of Indian equities, 50% of the total float, and our markets became highly vulnerable to global events. If something goes wrong with US or the global economy or global rates, our markets were getting impacted, also impacting the money market, currency, everything. Now for the next several years, if we don't create an SIP movement on the fixed income side with some incentives, looking at a larger picture, that today what has happened in last 1 or 2 years, that global events did impact our equity market as much because we have this 15,000–16,000 crores per month of SIP coming in equity. We have to visualize that 5–7 years later, what will happen in our bond and currency market. So work has to start now. That was my initial point of how policymakers need to think of
in the Business Standard Conference, one thought that the governor would lap up that question on bond index. He actually answered with caution, saying, let us be aware that we will be even more vulnerable to global events. And I later learned that was why the Finance North Block also did not have a celebratory press conference or press release when the index inclusion was announced, because along with it comes the vulnerability or the responsibility.
But one point which I want to bring to your attention, when you allow markets to function, and today we have a vibrant F&O market, on many days it is providing money for speculation to speculators at a rate which is lower than the risk-free rate, the rate at which Government of India borrows. That's the efficiency of our equity market. Can we now bring that into debt market?
Well, I guess it's not going to be that easy to sell this idea. I mean, I don't see it happening in the foreseeable future. If anything, the bond inclusion has not been a celebratory moment in any of the policymaker, RBI or North Block. But more broadly, I worry that the debt mutual funds are not as vibrant as equity mutual funds in terms of popular reception. That's a bit of a worry. Final thoughts, I believe the audience also has a right to question you. So, we get a few minutes. I mean, how much do we have, or did I overstate my, overuse my welcome? If you can manage 2 questions, yes.
Yeah. I go back to the initial data that Nilesh Bhai and Latha you provided. The addressable market is 51 crores. The actual is 4 crores. So it's not a finance question, it's a sales and marketing question. Does the industry have a distribution problem or a consumer behavior problem?
Nilesh Bhai, what a straight question then.
It's combination of both. For hundreds of years, people have invested in bank deposits. Mutual fund is a phenomenon of late 90s. For thousands of years, people have invested in gold. Mutual fund is 1990 onwards in some sense. So it's a combination of both. Push and pull, both is required. Consumer behavior needs to change with financial awareness by technology reaching out to them, lowering cost, and most importantly, as Nimesh mentioned, no goof up and value add.
Anyone else wants to take that? No, I've heard some elderly relatives of mine say that abhi bas sara paisa I'm going to take it out from everywhere, put it in bank deposit, because there is this trust of the branch manager, the branch, and the simplicity of the product, which is why I hopped on that question, that a lot of people don't want to be confused. Maybe I'm missing out on 10 percentage point of income, but there is a category of people who are so scared of the complexity of the product and the fact that there is no one branch manager or one person whom in my old age I can walk to or phone and with whom I have a relationship. That is a genuine issue that I have heard from some consumers.
No, there is a slightly different way. Sure. Sorry, I don't know if I can ask another question.
Please go ahead.
Yeah. If you look at an FMCG industry, while you attempt consumer behavior change, which is the pull factor that you talked about, many times distribution ensures, availability ensures consumer behavior change. Now, I did not use a dust-free mop earlier. We used a traditional jhadu. But today, dust-free mop is available, so everybody moved to dust-free mop. Just a distribution ensures behavior change. Should you think of something like that?
Nimesh, any thoughts on that?
Yeah. One thing we have to understand, the mutual fund products is a risk product. It's not a banking product. The problem is that when we sell a mutual fund product as a banking product, that's where the problem is. And as far as your question of it has to be push and pull both. And second, we have to understand when the tax laws were changed, the idea was so that to risk capital need to be awarded. Some portion, 35% has to be in equities. Now that 35% again can be broken into active equities and arbitrage, so on and so forth. Selling a no-risk product and having the premium of risky asset is something there was an issue, and we all are responsible for that. The distributors, the manufacturers, the investors, everything, because we got into habit of getting this rewarded so that the creamy layer were getting this message, the benefit, but the people at large were not. These things will happen. The behavior depends on, actually, most of the distributors are selling a product, as I said earlier, it has to be revenue neutral, and as Nimesh said, it has to be volume game, not a margin game.
I think the unanimous view coming is that it's both a mix of both,
Also,
and maybe some more issues.
50, 70 years for toothpaste to reach a certain, which is like such a basic necessity to reach a certain stage. And
all of us want new distributors to come in, and the compensation that is being paid is paid all across. There is, once upon a time, what you were saying is true. Now it is more or less whether you are getting me small money, whether you are getting me big money, the compensation is, because we also understand that the small guy has to also run his outfit. So it's not that different now than what it was, say, 3-4 years back, when there was upfront and all. Now it is a trail. For me, any money that comes on trail, whether it comes digital, whether it comes, it does not change much. You can, actually the absolute amount is not significant for a new guy. As she said, she was saying 1 crore if somebody gets. Over the year, if he earns 1 lakh, so 8,000 was per month. Right? Yeah, so that is the challenge. But any business, the logic is that any business takes 3 to 5 years to set. So this business also, if you start, for you to make 10 crores of AUM, it will take you 3 to 5 years. So that was the logic. We had discussed this when these new guidelines were also coming. The logic that came, any business takes 3 to 5 years to settle. So create a business over 3 to 5 years. That's what the regulator's view was at.
I think we can take one more question. Yes.
Good afternoon, everyone. So my question is that what differentiates the US retail mutual fund market from the Indian retail mutual fund market? What is it that has led to a huge growth in that market compared to the nascent stage or the growing stage at which India is? Is it the lack of products, guidelines, or is it in terms of distribution? What kind of differentiates, or why has that market grown so faster or so huge as compared to the Indian market?
I'm saying with this deep sense of pride as well as humility, what differentiates some of the developed markets, the way it has evolved and the way it's evolving in India. In India, it's better transparency, it's better technology, it's better regulation, and I would say far more investor-centric than most of the other places in the world. It has taken 100 years for them to even think about what we have done on the classification of schemes in India. And at such granular level, this is the most regulated market in the world. There's nobody who comes anywhere close to us the way we are regulated, the way the transparency of the product, and the kind of disclosures that you get in India, you don't get that anywhere else in the world. I give you one or two very small examples. So, I mean, he's the largest ETF manager in India, managing the EPFO money now. He also manages, I was closely involved in that. And I told EPFO that when we started managing the money, that you'll be paying 7 basis points. And I said, today is the day when we started that day. Today is the day when one of the largest ETF after 40 years has brought down the fee to 7 basis points. For, let's say, a large institutional investor, we are starting our journey at 7. But it doesn't end there. In India, if you are managing that ETF and you are making money by lending your stock in SLBM, if you know, lending your stock, the money goes to the investor. That income goes to the investor. In US, any large ETF player, that income is pocketed by the asset manager and not by the end investor. I can give you 50 other examples. We are the most transparent and the most regulated, the most publicly scrutinized, simply because the amount of disclosure that you get here, you don't get in many other places. Having said that, of course, there is a lot to learn from what are the good things that have happened. And that's why I said with great sense of humility as well, they have become so large, and I have full confidence that we'll also become large. I'll just take one more minute. In Silicon Valley, for example, because you talked about we don't have those kind of companies. In Silicon Valley, they say that if you have enough engineering prowess and put enough amount of money, capital, these two are the modes. If you put enough engineering prowess, enough amount of capital, any human problem can be solved. And that's why they think like that, right? I mean, somebody is like taking the spaceship, somebody is creating something and all of that. So you can, in India, I flip it. In India, if you have enough passion and a deep sense of purpose, any problem can be solved.
So one small question.
It's a very inspiring way to wind up this conversation.
Madam
We
Latha,
will have to carry the conversation.
One small question.
The regulator is here, and I don't think it's fair to keep the regulator waiting.
Okay.
So we will carry on the conversation over a cup of coffee.
Sure, sure.
I don't mean to be rude,
No,
sir,
it's a
but
regulatory
I think the regulator
issue.
has to take the stage,
I'm just telling.
and I'm waiting to hear him.
I'm just suggesting, like, everybody has got in their own stable a vertical called insurance. Now, insurance, we also know what commission goes to the distributor, and still happily, buy insurance policy. So you sitting on the BOD level, now can you derive some kind of, encouragement from that particular zone where so much of commissions given outside and still we buy that. So if going by the same...
I run ICICI Prudential asset management company. He runs HDFC asset management company. Our insurance arms are completely different from us.
Fine.
We have got nothing to do with them.
Fine.
The shareholder is common, that's all.
But the hint here is people can still invest if you create underwriter within your own AMC to take care of losing mutual funds. Suppose some scheme goes away because of the fund managers, misreading or mistiming. So some kind of protection given to the fund investors, creating underwriting sale within your organization and give similar kind of, confidence to investors like
We
insurance.
take the point on board, sir. But I think we will have to call it a day over here.
Fine.
Thank you very
Thank
much.
you.
Thank you very much for your
A
participation.
huge
and
round of
thank you,
applause
gentlemen.
for our panel. What an insightful discussion it has been, from an analogy of a South Indian platter, showing the variety we have in mutual funds, to growing our investors and distributors to the next level. I would like to invite our past president, Mr. Uday Khanna, to present a few mementos to our panel here as a token of our appreciation. Keep those claps coming. Thank you. We request the panelists for a group photograph, please. Thank you. On behalf of the chamber, once again, thank you very much for your presence and support to the event. Thank you.